the next crypto winter will be a nuclear winter, because what will happen is these DATs will trade at discounts. Now the hedge funds come in, they go, okay, we can just go raise 2, 3, 4, 5 billion, whatever it is. We'll buy up the company, but we're going to short before we buy it up, and then we're going to dump it on the market and get extra leverage. We're going to shank the price down 90%.
Couple of things here. One, like the eternal problem of the DAT is that they don't have an internal, call it price stabilization mechanism like the ETFs have with the create destroy mechanism for shares. So if I'm like, think about your average like canonical DAT, which is basically I'm a public equity vehicle. I'm going to go buy some assets. And what I'm going to do with those assets is like throw them in the room behind Rom with the books and just leave them there. And what that means is that the resting price of that thing should be the assets inside of that less the future cash flows that they're going to be paying out to like management, custodians, expenses, etc. E.g., they should trade at a discount. And your view of how big the scalping is going to be and how well they're going to do accumulating those assets should influence what that is. The problem that creates is that a lot of people who can do those things themselves are then in a position where they can make money by consuming these things in M&A, right? Which is why you're going to start seeing this happen. Because if I'm not trading at a discount and I'm another DAT, and I can buy one that's trading at a discount, I'm essentially just monetizing that gap. That I think is the benign version. The less benign version is that I am somebody like Coinbase with my own institutional custodian, or I am like a hedge fund and I look at that thing with a large gap and go, I could just take that thing, wipe it out, sell the assets and make the money. And so
It's going to happen. It's going to happen. It's going to happen. In a downturn, the MNAV multiple is going to compress for a lot of them, and you're going to have one, maybe two big players in each space, each
caveat on that. I wrote one of my newsletters on this a while ago. I think there's two types of DATs that will survive. One is there are a few places in the world where DATs are a form of regulatory or tax arbitrage. That's not the United States, but it can be elsewhere. Totally get it there. Like tax optimization is a very real thing. You should probably do it, generically speaking.
I think one big example of that's Metaplant in Japan.
Correct.
For our listeners.
And so number two is DATs, I think this is kind of where Vinny's going, that have an operating model and cash flow and can consume other things, be it DATs or other cash flowing businesses. Those are likely to be the one big one that remains. So if any of these DATs survive, I will jokingly say over time, they start looking more like an accumulation company, right? The most familiar of which is Berkshire Hathaway, but there are others that exist in the world, like, that do M&A serially to bring things in and create value, or quite frankly, just have an ETF.
Yeah, look, I think it's quite phenomenal that we had the first DAT, which was MSTR, and then we had a proliferation of DATs over the last 3 months combined with the SPAC craze. And now we're talking about MNAV compression and the collapse of these DATs. I mean, they came quick, they left quick. Welcome to crypto. That's what it is. Yeah, look, I agree with your observations. You don't need that many DATs. Look, I think a lot of this is liquidity seeking. You have insiders that can wrap these and put them into public markets. And I think the liquidity that's offered by U.S. public markets, which is significant. No, that's not all of them. I don't think the intentions are nefarious. I think there are a handful of very high quality DATs with great opera, like Andrew Keys. I think is like a very high quality, high integrity individual who's thinking about staking yield. How do you maximize that? And he's invested alongside that with his personal reputation. But I think in other cases, you really have to question, like, what are the motivations? What are people really trying to do? Is there a back end transaction somewhere where there's liquidity? You have to keep your wits about you.
Yeah, I gotta say the best business to be in right now is, I guess, investment banking, because you can make money selling all the placements, and then you can make money.
Well, the flip side to
doing some speed dating and putting these companies together.
You're right. The flip side to that, though, is the quote: "Be careful of Wall Street sells." The other, that's what you're saying. Like Wall Street says, when the ducks are quacking, feed the ducks, right? So a lot of ducks are quacking, they're getting fed. And, we've talked about before that when you see a proliferation of new issuance, that is a contra signal. So you have to make sure that you don't top tick the market on a stupid deal. That's what happens around this time of This is the kind of stuff that happens, right?
Yeah. Vinny, are you guys invested in DATs? Is that part of, or even just individually?
Well, so it's a Praxis Capital. We don't invest in debts. Not yet. We're Delta Neutral Arb Fund. I think DATs offer some interesting arbitrage opportunities, but it's hard to unwind them, right? So you can bet one way on the multiple, and you can say the compression will happen, but it doesn't mean it unwinds, and you can get hold of it. Like you could short a DAT that's sitting at 1.3 times multiple, and it could start trading at a discount eventually, which is fine. You'll make money on the spread, but it's you have to, I guess it's just, you guys get it. Like, unless there's distributions, unless you can actually redeem the shares for the underlying, it's very hard to just arb that as an arb fund.
Is your front run them? They have to buy spot. They're going to buy spot. Just measure who's going to buy what spot. Look at it by
Yeah, but there's some. I've got some liquidity concerns with what I'm seeing in the DAT space, and I think that what Saylor's doing is he's over leveraging MicroStrategy by bringing out all these additional instruments on top of MSTR, right? And so everyone, like, while there's liquidity in the market, everyone's kind of going along with it, and no one who's actually sane. And maybe there are people speaking out about it, but like everyone's just running with it right now, and everyone's kind of, like MSTR is trading, I think I last saw 1.6 maybe, 1.5, 1.6 times assets, which is kind of crazy. And he stacked up all these debt instruments on top of that. If Bitcoin, this is the spicy take, which nobody wants to talk about. Ram's saying like, hey, Bitcoin 107's a buy, 110's a buy, whatever. What happens if Bitcoin drops to 50 or 60? Oh, that'll never happen. Okay. I've been on the block a long time. If Bitcoin goes down to 50 or 60, MicroStrategy starts to look extremely vulnerable, and I think at some point it could blow up. But yes, it's dependent on Bitcoin.
If Bitcoin breaks like 99, you're supposed to sell. You're supposed to get out. No one's saying buy at 107, then hold on, until 60.
No, but no. But that's not how it gets communicated. That's not the narrative in the market. Everyone is like cost average into Bitcoin, buy Bitcoin no matter what.
I'm not like that.
No, I was going to say, Ram, you don't say that, but a lot of people do say buy Bitcoin at any price and literally never sell.
Yes.
With that said, there are plenty of people who will be unwinding DATs. It's not trivial, but the thing to understand is they will not be retail investors, and it may not be good for the retail investors when they get involved with unwinding these things. I guess I would put it to people this way: unless you yourself are one of them, you might not want to be in a trade with an activist hedge fund trying to unwind a DAT, because they've probably done a lot of stuff behind the scenes, like, shorted all the tokens already when they bought the thing to lock in a discount. And then they're going to go wage war on that company. And people think I'm joking, but I used to work.
You're right, 100%.
APM, and I've seen I'm going to remind people that they will do stuff like, we're just going to sue you until your insurance company drops your D&O insurance, and then go after your board members personally just to exhaust everybody to force you out. Or you have maniacs who have done things like, and this is not an exaggeration, stolen military vessels from sovereign nations to collect on debts coming after these things. They will get it done. It's just
the next crypto winter will be a nuclear winter, because what will happen is these DATs will trade at discounts. And I'm not saying all DATs are bad, but there'll be a lot of DATs that will acquire a lot of coins for a certain project. They will trade at a massive discount. Now, the hedge funds come in, they go, okay, we can just go raise 2, 3, 4, 5 billion, whatever it is. We'll buy up the company, but we're going to short before we buy it up. And then we're going to dump it on the market and get extra leverage. And we're going to shank the price down 90%. And
interesting point. So I had a chat with a person who's perhaps the most active in DATs. By the way, you make money in the DAT strategy is by making decisions on to participate in the pipe or not.
No. We're talking about past that.
That was a quick. So here's the alternative, Vinny. So suppose you're trading at a discount to NAV discount. So this person is a very prolific investor in DATs, and I actually made the point you guys are making. This is what he said. He said, I disagree with his response, because I know you guys are probably going to be on my side as well. I'll share his thought process. He said, look, if you're trading at a discount to NAV, then what you do is you sell the spot asset that you've been accumulating and buy back your shares. because that's a value creating mechanism.
But Saylor specifically said he won't do that, by the way.
Sailor won't, but the argument is that these other DATs
Okay,
that
so,
trade at a 30%
so
discount.
here's the problem. When you've got a couple of percentage points of the float,
Yeah.
the moment you start selling and people are watching those wallets, the market front
I
runs
agree.
itself.
So that's why I disagree with the response. You're right, because like if you're the whole point of the DATs accumulate.
Let me just give you the mechanism here, okay? And I haven't announced the details yet, but I'm working on a couple of DATs. So these are things that I'm thinking about very, very carefully.
It's just you, me, Vinny, and maybe like 10 or 20,000 other friends. So we'll keep
just between us, 5,000 people.
No. I get it. Like, I mean, it'll come out very soon, but like, I wouldn't say which ones or what I'm doing exactly. But here's an example of a risk factor in a DAT. I come to you, Ram, you're running your whatever XYZ DAT, and you're trading at a discount because the market's really weak right now. I get you to sign an LOI or buy the DAT because you're trading at a discount and you can't offload. At the same time, I'm busy basically selling the coin,
shorting
I'm shorting the coin, so I have more negotiating leverage with you because your MNAV multiple is now negative and getting bigger and bigger. So you then like, you know what, the price you offered me yesterday, it's actually good because it's 20 or 10% more than what it is today. I'll take it. You sell it. Meanwhile, so that happens. Now I've acquired those coins, but now I'm going to unwind the DAC and sell them into the market more and layer on my short deeper. And by the way, the way they do this is they use a combination of puts and spot shorting, right? So with deep out the money puts, you basically just need to delta hedge it down. So you don't need all those coins. You say, okay, go to an OTC desk, sell me a 30% out the money put, and then negotiate the contract with you. And then those puts basically go deep in the money once you start offloading the debt. These guys are going to make a killing unwinding these debts.
Who are these guys? What's the profile?
Hedge funds, Wall Street. Wall Street is going to make so much money on the way down.
Are you talking
the next crypto meltdown will be a nuclear crypto.
The Jane Streets of the world? Let's be specific here. Like what?
I'm not going to point out specific hedge funds, but there are guys out there who will basically short the shit out of the crypto market the moment the dam bursts, 99K, whatever number you want to use, it's going to cascade.
I don't disagree with that, by the way. So my response to this individual who's not on the show, we have to get him back, but is that these are pro-cyclical markets. So there's reflexivity on the way up and reflexivity on the way down. So the person's argument is like, look, if you're trading a discount NAV, then you sell spot, buy back your shares, you close the gap. But the point is, if you bet against
you can't.
Then the spot market comes undone, and then your DAT starts to go to zero too. It's like trying to bail water out of a boat, and the boat's taking on more water. It's just not going to. So I agree. That's the risk, and I think you could get, things like the next GBTC, the next ETHE.
It's going to happen. My prediction is there'll be one, max two DAT winners per major token, and then that's it. You're going to have very few.
Actually, I would say like the long tail of DATs with limited sponsorship and limited adoption, most of those won't even have a great DAT behind them. Exactly. I think the majors will, like 4. Solana, Bitcoin, Ethereum, Hyperliquid. That's about it. After that, good luck.
Yeah, although I am interested in the long tail now. I mean, especially since some of the bigger ones are getting saturated, and I mean, it's almost like at that point you almost like bet on all the horses, where like at some point you just try to launch as many of these little DAOs as possible, corner a decent part of the market cap, and if you get the next hype, you get the next something, you're gonna make a killing, and hopefully it'll offset.
No, but there are some unique, and again, I'm looking at some of these. There are some unique opportunities for certain tokens. So thinking about what is a DAT, it's a regulatory, it's an arbitrage, right? It's a bridge between capital markets that exists in 401k funds, in the money is not sitting in crypto, it's sitting in sort of in the financial markets, and getting into a crypto that's only listed on crypto exchanges. And so if you can find one where it's very undervalued, widely distributed, maybe it's at all-time lows, that's probably a better one than something that's at all-time highs and everyone has already got it, right? Or has access to it. So there are these arbitrage opportunities, but MicroStrategy and Bitcoin is the bellwether for our industry. And so until the bow breaks, everything's fine. Like, I think we're in a good
One
spot.
thing just in defense of MicroStrategy, look, they're using non-recourse debt and they've been selling bonds with converts at a 0% interest rate. So I don't think the debt capital stack is
No,
is
but
there's no corporate debt.
Okay. How does MicroStrategy pay the interest on the debt?
Look at the interest rate on the bonds. I mean, they have 0% converts out there.
Oh, no, not all of them.
I think
Some
he's
of them
talking
are
about
like
the
11%. They've got some 11%, 12% as well now.
Yeah, they
Right.
sell more common shares to do that.
Well, that's not great. We should bring on someone that's looked at the entire MSTR debt stack and take a look.
No, the argument is it's in 5 years from now or 3 years from now, so it doesn't matter right now. I'm like, no, I don't think so. We go through a financial crash or crisis.
I think your general idea is correct. Like, there's this concept called the Minsky hypothesis, developed by Hyman Minsky. It's an extraordinary framework. I see heads nodding, Austin and Vinny there, but I'll lay it out briefly. So the concept is that at the beginning of a market run, you underwrite assets to free cash flow. The unlevered free cash flow is enough to motivate a purchase. Maybe that's 8%, 12%, 14%. Then as the market gets going, that asset's priced higher, the yield is lower. To get to your target return, use some leverage. Okay, so now you say, oh, I can get to my 8% bogey, 12 or 14%, but I've added leverage to the system. And obviously, we've seen a levering of assets, including MicroStrategy. And then what happens in phase 3, it's comparable based analysis. That means you say, oh, you should buy it because the public comp is 60 times earnings. Therefore, it's a bargain because this is at 42 earnings. So that's actually a form of greater fool theory. You're betting that there's some marginal buyer who's a sucker that's going to buy. And so Vinny's point is that some of these assets are transitioning from phase 2 to phase 3 because they're kicking out the can to the future, and there's going to be some buyer in the future. The problem is that it's all reflexive. There is a buyer in the future if it keeps going up, but if it doesn't keep going up, then there's no buyer in the future. You can't presume that.
Well, I was going to say you've kind of hit on the problem with DATs trading at an MNAV premium, right? Like, this is the sort of tale of the Minsky theory. Is like, if you listen, without being overly like mean here, if you listen to most people like trying to explain why their DAT should trade at an MNAV premium, it's a version of the old joke in mathematics of part 1, a miracle happens, part 2, right? And it's like, guys,
right. That's exactly.
It's like, explain to me how using leverage causes your underlying asset to become more valuable over time, right? Like, you could buy more of it. I get that. That's how leverage works. Cool. Totally good. But like, say more, and they just can't. So to me, part of why I've been skeptical of most of the DATs, and again, there are a subset, like there are a handful of DATs with things like operating cash flow. Okay, maybe you're going to work, but for anybody who's in the asset part that's trading at a premium, you're in the final phase of Minsky already, and we all know how
I
that
agree.
ends.
I agree. It reminds me of the old joke about the economist on an island with a can of soup, and then someone asks the economist, "How are you going to get off the island?" Well, assume a can opener. That's what you're saying. Like, assume 10x. If we get the 10x, we're going to 20x. And aren't we going to 10x? Well, look at MSTR here.